Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel at the rate Accounting Buddy NB. In today's video, we begin our journey into special purpose books by exploring the subdivision of journal and understanding why it is essential for efficient accounting. Our main focus will be the purchase book, its meaning, format, and key features. You will learn how to record transactions including freight and packing charges, followed by how to post journal entries and transfer the purchase book balances to ledger. Finally, we will wrap up with question and answer session and practical illustrations to strengthen our understanding and application of these concepts. So grab a seat and stay till the end to watch the full video. We have studied journal in detail in our previous chapter. Now let us understand all about the subdivision of journal. In accounting, the journal is the primary book of original entry where all the financial transactions are first recorded in chronological order. As business grow, the volume of transactions increases, making it difficult to manage everything in a single journal. To manage this, the journal is subdivided into specialized books called subsidiary books to enhance efficiency and accuracy. Let us now learn about types of subdivision journal. First is cash book. It records all cash and bank transactions. Second is purchase book. It records credit purchases of goods only. Third is cash book. It records only credit sales of the business. Fourth is purchase return book or return outward book. This subdivision of journal records goods returned to suppliers. Fifth one is sales return book or returns inward book. It records goods returned by the customers. And the journal proper or the journal records transactions not recorded or covered in any of the above books. Journal is subdivided into subsidiary books or special journal and journal proper or journal. Subsidiary books or special journals are further subdivided into cash book, purchase book, sales book, purchase return book, and sales return book. Let us now understand advantages of subdivision of journal. It helps in division of work and increases efficiency. It makes it easier to trace errors and maintain records. It facilitates the preparation of final accounts. It is useful for internal checks and controls. The above books are also called subsidiary books or special purpose books or special journal or books of original entry. Let us learn more about purchase book or purchase journal. A purchase book is to record credit purchases of goods traded in or raw material used for manufacturing of the goods. The purchase book also referred to as the purchase journal. It helps businesses track credit purchases related to goods and services vital to their operations or intended for resale. Thus, the cash purchases of goods and purchases of other items like fixed assets are not recorded in the purchase book. Entries in the purchase book are recorded on the basis of invoice received from the supplier with the amount net of trade discount, that is, the list price or the catalog price less trade discount if any. List price or catalog price is the declared price of the goods by the seller at which the goods are sold. Trade discount, if any, is allowed on the list price or the catalog price. Let us learn about the format and the contents of a purchase book or the purchase journal format. A purchase book has got 8 columns as displayed on your screens. First column is of date. In this column, the date of the transaction is written. Second column is of particulars. In this column, the name of the supplier of the goods, description of the goods such as per unit price and the quantity purchased is written. Column number 3 is for invoice number. In this column, the invoice number of the goods purchased is written. Column number 4 is of ledger folio. When the purchase book entries are posted in ledger, page number of the ledger is written in this column. Column number 5 is for details. In this column, the amount, that is the list price or the catalog price of each item of the goods purchased is written. If the trade discount is allowed by the seller, it is deducted from the gross amount as displayed on your screens. The total gross value of the goods purchased is mentioned. Trade discount, if any, is then deducted from the gross value. Any extra expenses like freight or cartage payable extra are added, and the total amount payable to the supplier is mentioned in this column. Column number 6 of the purchase book is that of cost. In this column, the cost of the goods purchased is written. Column number 7 is of freight or any other expenses agreed to be paid to the seller is written in this column. Column number 8 is of total amount. In this column, the amount of the invoice, that is the cost of the goods, and the expenses payable is written. At the end of a specified period, say a week or a fortnight or a month, the purchase book is totaled. The total value of the goods purchased is posted to the debit side of the purchase account and the credit in the individual accounts of the suppliers from whom the goods are purchased. Let us now learn key features of a purchase book. First feature is it records only credit purchases of goods. That means it records only purchases made on credit of goods traded or raw materials used for the manufacturing of the goods. Second feature is that it excludes recording of cash purchases. Cash purchases are recorded in the cash book and not in the purchase book. Purchase book maintains chronological order. Entries in the purchase book are made as and when transactions occur date-wise. All the purchase transactions recorded are backed by purchase invoice received from the suppliers. In the purchase book, net purchase amount after deducting trade discount, if any, is recorded. Purchase book summarized posting to ledger. Instead of posting each purchase individually, the total of the purchase book is posted to the purchase account periodically, that is weekly or monthly. Specific goods which are not meant for resale or not to be used in the production, such as furniture, computers, etc., are not recorded in the purchase book. They are directly booked into the journal. Let us learn a term related to the purchase book, that is the invoice. It is a document prepared by the seller and is sent to the customer. It shows the goods sold, quantities, description, price, trade discount, and other expenses payable if any. It is a documentary evidence basis which the purchase entry is passed. Let us understand the utilities and the importance of purchase book. It saves time and reduces clutter. It reduces the volume of the work required to pass journal entry for each credit purchase. Further, there is no need to post every individual credit purchase transaction in the ledger separately. It helps in tracking supplier balances. Each supplier account is updated based on the entries made, making it easy to manage payables. It facilitates to quickly find all credit purchases without mixing them up with cash purchases or expenses. It assists and simplifies preparation of trial balance and final accounts. Since entries are systematic and supported by invoices, it is easier to detect mistakes early. It provides clear evidence for auditors about purchase transactions during the audit. Let us learn more about purchase book with an illustration. From the following information of Lovely Trading LLC, prepare the cash book for the month of February 25. Transaction T1 is on your screens. On 1st of February 25, sugar in various pack sizes and quantity was purchased from the supplier Tolly Trading LLC. The supplier also offered a trade discount of 10%. Now this credit purchase transaction will appear in the purchase book of Lovely Trading LLC as displayed on your screen. In the date column, Date on which the transaction occurred, that is 1st of February 25, will be written. In the particulars column, the name of the supplier along with the details of the goods purchased will be mentioned. The details include quantity purchased, pack size and the rate of each item along with the unit of measurement. The gross value of each item purchased will be mentioned in the details column. The total value of the goods purchased is also mentioned in the details column, which in this illustration comes to $125,000. The trade discount of 10% allowed will be mentioned in the particulars column, and the value of the discount of $12,500 in the details column just below the total value of the purchases. Net value of purchases, that is $112,500 after deducting the trade discount, will be mentioned in the amounts column. Transaction T2 is on your screens. On 10th of February 25, Lovely Trading bought two type of tea packs from Kohli Trading LLC at a trade discount of 10%. This transaction will be recorded in the purchase book as displayed on your screens. In the date column, the actual date of purchase, that is 10th of February 25, will be written. The name of the supplier, Kohli Trading LLC, along with the complete description of goods is mentioned in the particulars column. The gross amount of each item will be mentioned in the details column. Total value of the goods purchased under the transaction amounting to $63,000 is also mentioned in the detail column. Trade discount of 10% offered by the supplier is also mentioned in the particulars column, and the discount value of $6,300 is mentioned in the details column below the total value of the goods. The net purchase value of $56,700 after deducting the trade discount will be shown under the column of amount. Transaction T3 is that on 15th of February 25, Lovely Trading LLC purchased 200 cartons of condensed milk at $1,000 per carton. This transaction will be recorded on 15th of February 25 as displayed on your screens. The name of the supplier along with the complete particulars of the transaction is mentioned under the particulars column. The total value, that is $200,000 worth of purchases, is mentioned in the amount column. At the end of the month, all the credit purchase transactions are totaled. In this illustration, the total value of the purchases for the month of February 25 comes to $369,200. And on last day of February 25, that is 28th of February 25, the total value is posted to the purchase account by debiting an amount of $369,200. Let us learn some important facts and related entries connected to the credit purchase transactions. First is freight or cartage. The seller may include freight charges in the invoice for transporting the goods. In the purchase book, a separate column is maintained to record the freight charges. The total cost column is debited to the purchase account, and the total freight column is debited to the freight inward account. The total of the invoice price is credited to the supplier account. Second point is packing expenses. Like freight, the seller may include packing expenses in the invoice. In the purchase book, a separate column is maintained to record the packing expenses. The total cost column is debited to the purchase account, and the total of the packing expenses column is debited to the packing expense account. The total of the invoice price is credited to the supplier account. Let us take another illustration of recording transactions in a purchase book of Messer Tolly Trading LLC. Transaction T1 is on your screens. Tolly Trading LLC bought 200 electric bulbs at $5 each and also bought 100 tube lights at $10 each from Tube Trading LLC on 1st of March 25, at a trade discount of 10%. This transaction will appear in the purchase book as displayed on your screens. In the date column, the date on which the transaction took place, that is 1st of March 25, is mentioned. In the particulars column, the name of the supplier, Tube Trading LLC, along with the full description and details of the goods bought is mentioned. The value of each item of goods is mentioned in the details column. The total value of all the goods bought is also mentioned in the details column. The percentage of trade discount allowed on the goods is mentioned under the particulars column. The value of the trade discount allowed is mentioned under details column. The net purchase cost after deducting the trade discount is mentioned under the cost column. The transaction T2 is on your screens. Tully Trading LLC purchased 20 electrical heaters at $50 each and also purchased 100 table fans at $75 each from Poly Electric LLC on 11th of March 25. The supplier also charged $100 as packing charges on these goods. This transaction will appear as displayed on your screens. In the date column, the date on which the transaction took place, that is 11th of March 25, is mentioned. In the particulars column, the name of the supplier, Poly Electrical LLC, along with the full description and details of the goods bought is mentioned. The value of each item is separately mentioned under the details column. The total value of all the items bought is also mentioned in the details column. The additional charge of packing charges is mentioned under the particulars column. The value of the packing charges is mentioned under the details column and again under the packing charges column. The value or the cost of the goods bought is also mentioned under the cost column. The sum total of the total of goods $8,500 and packing expenses of $100 is mentioned under the total column, which in our illustration comes to $8,600. On 21st of March 25, Tully Trading LLC bought 100 bulbs at $3 each from Bulb Trading LLC on cash. Since this is a cash transaction, it will not be recorded in the purchase books. On 27th of March 25, Tully Trading bought 10 dozens of electrical bulbs at $5 each and also bought 100 power plugs at $2 each from Molly Electric LLC. The supplier also charged $25 as freight charges for the transaction. This transaction will appear as displayed on your screens. In the date column, the date on which the transaction took place, that is 27th of March 25, is mentioned. In the particulars column, the name of the supplier, Molly Electric LLC, along with the full description and details of the goods bought is mentioned. The value of each item is separately mentioned under the details column. The total value of all the items bought is also mentioned in the details column. The additional charge of freight is also mentioned under the particulars column. The value of the freight charged is mentioned under the details column and again under the freight column. The value of the cost of goods bought is also mentioned under the cost column. The sum total of the goods $800 plus $25 freight cost is mentioned under the total column, which in our illustration comes to $825. At the end of the month, all the columns of the purchase book are totaled. In our illustration, the total cost of the goods purchased is $11,100 and the total freight and the packing charges are $25 and $100 respectively. The total value payable to various suppliers comes to $11,225. Now the journal entry for the purchase book transactions discussed in the previous slide is displayed on your screens. The entry is passed on the last day of the month, and in our illustration the last day of the month of March is 31st March 25. The accounts which are affected are purchase account, and it will be debited by the total value of the purchase made during the month of March 25 for $11,100 after deducting the amount of trade discount. The amount of freight paid to the supplier will be debited to freight inward account for $25. The amount of packing charges agreed to be paid extra to the supplier will be debited to packing charges account for $100. Now the respective supplier accounts will be credited with the net value of the purchase after deducting the trade discount if any, and by adding the other expenses if any agreed to be paid to the respective supplier on account of freight or packing charges as the case may be. Therefore, Tube Trading LLC will be credited with $1,800 after deducting 10% trade discount from the list price of the goods of $2,000. Poly Electrical LLC account is credited with $8,600 being the total of the value of the goods for $8,500 and packing charges of $100. And Molly Electric LLC account is credited with $8,025 being the sum total of the value of the goods of $800 and $25 for freight charges. Narration of the transaction is also written, which in this illustration is being the purchase for the month of March 25. Let us now understand the mechanics of posting of purchase book in the ledger accounts. In the particulars column of the purchase book, name of the party from whom the goods are purchased on credit is written. The amount payable to the supplier is credited to his account by writing the words by purchase account with the value of the goods purchased. In addition to the value of goods, in case any other amount such as freight charges is also payable to the supplier, such an amount is posted to the credit side of the supplier account by writing the words by freight inward account. Let us now post the entries of purchase book to the ledger account of respective supplier accounts. The abstract of the purchase book related to the goods purchased from Tube Trading LLC for $1,800 net of trade discount is displayed on your screens. This purchase transaction will be posted to the supplier account of Tube Trading LLC as displayed on your screens. The entry will be posted on 1st of March 25 on the credit side of Tube Trading LLC by writing the words by purchase account in the particulars column for $1,800. Next purchase book transaction of the purchase of goods from Poly Electric LLC is displayed on your screens. This purchase transaction will be posted to the supplier account of Poly Electric LLC. The entry will be posted on the date of the transaction, that is 11th March 25 on the credit side of the account of Poly Electric LLC by writing the words by purchase account for $8,500 and by writing by packing charges account for $100. Next purchase book abstract of the purchase transaction for electric goods purchased from Molly Electric LLC is displayed on your screens. Let us see how this transaction is posted to the supplier account of Molly Electric LLC account. The transaction will be posted on 27th March 25 on the credit side of the account of Molly Electric LLC by writing the words by purchase account for $800 and by writing the words by packing charges account for $25. We have done one part of the posting of the purchase book entries to the respective supplier accounts. Now let us do the posting of the second aspect into other accounts. The purchase book we created in the previous slide is appearing on your screens. Let us see how the entry will be posted in the purchase account. At the end of the month, the purchase book is totaled, and on the last day of the month, that is 31st March 25, the entry will be posted in the purchase account on 31st March 25 on the debit side of the purchase account by writing the words to sundries as per purchase book for $11,100. Next ledger account in which we need to do the posting is that of packing charges. The amount paid as packing charges to one of the supplier will be posted in the packing charges account. The entry will be posted on 31st March 25 on the debit side of the packing charges account by writing the words to sundries as per purchase book in the particulars column for $100. Now the freight paid to one of the supplier will be posted in the freight inward account on 31st March 25 on the debit side of the freight inward account by writing the words to sundries as per purchase book for $25. Under this section, let us take few very short answer type questions. Question number 1 is, what are special purpose books? The answer is, books used to record specific type of transactions are special purpose books. Question number 2 is, name any two special purpose books. The answer is sales book and cash book. Question number 3 is, why are special purpose books maintained? The answer is to simplify and speed up accounting. Question number 4, what is recorded in purchase book? The answer is credit purchases of the goods. Question number 5, what is recorded in the sales book? And the answer is credit sales of goods. Question 107 is, how are entries from special purpose books posted to the ledger? And the answer is, periodic totals from each book are posted to the respective ledger accounts, ensuring accurate classification and summary. Question number 108, for what purpose a journal proper is used? And the answer is, journal proper is a residual book which is used for recording those transactions which are not recorded in any of the other books of original entry. Question number 109, mention the subsidiary books in which the purchase of furniture on credit will be recorded. And the answer is, it will be recorded in the journal proper because fixed asset purchase on credit cannot be recorded in the purchase book, and hence the appropriate subsidiary book is journal proper. For our YouTube channel's upcoming lesson on Saturday, July 26th, get ready for a comprehensive dive into the world of sales and purchase accounting. We will learn the distinction between the purchase book and the purchase account, explore the intricacies of sales book from their format and key features to their immense importance. If you enjoy the content of my channel and appreciate my teaching style, please subscribe, share and like my YouTube channel @Accounting Buddy NB. Thank you and goodbye for now.